Hello viewers, good morning, good day, good evening. Depending on the time you're catching this broadcast, it's your boy Pedro again. And it's been about a couple of weeks since my last broadcast, which I talked about um, the fact that there's a recurrent pattern that's been on for past 5 years or so, dating back to January 2017. Beg your pardon. So I made mention of the fact that we are back to that region where that pattern has occurred over the past 5 years or so, and I talked about the fact that if this pattern was to be consistent this time around, then we're likely to have like a bullish May, like a bullish run from cryptos and forex related pairs any moment from now. And so far so good. We've had a massive reaction as on getting to that part, on getting to that region. We're currently experiencing a reaction at that region. Take a look at the monthly time frame. You can clearly see that we are currently at that region. We're currently closing above that region on a monthly, on a weekly time basis, and also on a daily time frame basis. We've had a couple of back-to-back weekly rejections of that region. We finally had a close after two back-to-back rejections of that region. We've had a close above that region, a weekly close above that region. We've also had a daily close above that region, which happened on Thursday, and the RSI looks we're currently seeing the divergence in the RSI as well. So it's a clear case of loss of momentum from the DXY as things stand. You can clearly see a clear case of divergence from this point. We're clearly looking at a loss of momentum. Looking at the raw price action, we're looking at the fact that DXY has been bullish from this very point, which was 31st March, the ending of March, up till the ending of April. We had the massive bullish impulse momentum from the DXY. And on getting to that region, we're having a slow down in momentum. So there's a clear case of a loss in momentum from the DXY as a result of it's getting to this region. So it's a clear case of the criticality. It tells you how critical this region is. This region is a very critical region. You can see we finally struggled after back-to-back weekly rejections of this region. We've had multiple days rejections as well. On a daily basis, we've had multiple rejections of this region as well, and we finally had a break above it. And this has come with this massive, very obvious bearish divergence. We're currently seeing a retest as a result of this loss of momentum from the divergence from the DXY, and we're seeing a retest. We're looking at a potential retest to this level. So you can clearly see that this is a massive run from the DXY. The entirety of April was a massively bullish scenario for the DXY. We had this massive run, a massive impulse run, very strong momentum run, and then we can see that it's retraced to this level, retraced to this point, and we've had another impulse move to the upside. You can see you can see the clear difference between these two momentum. This is a raw price action I'm dealing with right now, I'm going to be zooming in so you can be taking a look clearly as well. It's a strong case of strong impulse run from this point, which took out the entirety of April. A strong massive run to the upside on getting to this level. We've had this loss of momentum from the DXY. We had a retracement, a minor retracement, and then we've had this latest impulse run. You can see the clear difference in these two impulse runs. You can see the clear difference between these two impulse runs. We're looking at a 20-year high from the DXY, and if this loss of momentum should stay consistent, and if this price action, like I said before, is to stay consistent as it has been for the past 5 years, we may likely see a massive retracement, or possibly even a reversal from the DXY. You can see a clear case of if we're to measure this, we clearly see that the DXY has had this move. This is about 6.197. From this point to this point is about 6.197, and if we're to take another measurement from this current impulse to this one, we're looking at just 2.44. Looking at 2.44, we're having 6.124, and 2.44. So that is close to 3 times a loss in momentum from the DXY. And I'll be referring to you. This is aside the fact that we've had this loss in momentum from the bearish RSI divergence, bearish divergence shown on the RSI. If you take a look at the Bitcoin, we've had a very similar pattern on the Bitcoin last year. We've had this just before the start of the downtrend, just before the achievement of the all-time high, the recent all-time high. We had this massive run, bullish run, from the end of September to the end of October. Virtually almost the entirety of October was a strong bullish period for the Bitcoin. We had this retracement, this minor, this little retracement, about a 38.2% retracement. We had the break above. We had a new impulse run after a serious loss in momentum, which resulted to about a 2 week of consolidation, and then we had this close above. Meanwhile, you can see the close above coming on on 8 November, which led to a new all-time high of 69k. You can see a clear case of a loss of momentum as well. The RSI responding in like fashion, like manner, complementing our raw price action with a clear case of a bearish divergence. And you can see what resulted from this. This was an all-time high as well. This was an all-time high, so a clear case of overbought situation, a divergence from an overbought situation, and then you can see the results. So I'm not saying that we're going to have exactly the same scenario play out here on the DXY, but I'm saying that we're having something very similar. And for the fact that this is happening at a region that has led to strong bullish runs for Bitcoin, a region that has had clear case of has experienced clear massive reactions in the past from DXY and the cryptocurrency markets. it is something worthy of note. And for the fact that the DXY has been in a very strong bullish momentum and of late has been in a serious overbought state, and for the fact that we are experiencing a 20-year and almost 20-year all-time high, is the fact that it's a clear case of it's something that we need to keep an eye on, to the fact that we may likely see a massive reaction to the south side from the DXY, and that would be good news for cryptos and forex related pairs alike. I'm going to be shifting down to the Bitcoin chart, and I'm going to be giving you an update as to how we have reacted in recent times to the current state of the DXY. You can see that we've had a clear case of a clear massive. We've had the highest volume since the May 19th May crash that happened last year. That is roughly 1 year ago. We're looking at a year ago, almost exactly 1 year ago. We've had the highest weekly volume since the week of that May crash. This is it's exactly, we're looking at almost exactly 1 year ago. We had 1.387 million Bitcoin traded on the benign sports market, and we had that something close to that, 964, close to a million Bitcoin traded on the Binance sports markets in the last 7 days. So you can see that despite all the massive pressure on the Bitcoin, the week closed above 30k. 30k has been 30k. If you have been active in this cryptocurrency market and you've been following my channel, you should know very well the significance 30k plays to this market. 30k holds the key as to where the market will likely go, and so far so good. I was looking at waiting to see how the week closes. A weekly close above or below 30k is very, very crucial as to where the market is likely going to head towards. And this happened. We had this close above 30k. We had a weekly close of 31,328, which is not too convincing for the Bitcoin market, but at least something to give something to hope, something to hope for, something to give the bulls something to give them a serious hope, basically something to give them hope to make them hope, basically. So we are currently trading above 30k, and despite the week we had a couple of days closing below 30k, the week was able to close above 30k. So we're looking at something that looks like a pin bar. I'm going to be I'm going to be analyzing this with you to see if this is actually a pin bar or something that actually looks like a pin bar. I'm going to be using the Fibonacci retracement, low of 26.7, low of 26.7 to a high of 34,243. So let's take a look at this candlestick to see if this qualifies to be like a pin bar. If this qualifies to be like a pin bar or not. So we've had we have the 38.2. we have the close below, the close is below the 38 slightly below the 38.2. So this to me is actually looks like a pin bar, but it's actually not really a pin bar, but it closely looks like a pin bar, but it's actually not a pin bar in the real sense. I'm also going to be looking at it from another perspective to see if this qualifies to be like a pin bar. We're going to be looking at the length of the tail, the length of the entire. Okay, so I've taken a look at, I've done a critical analysis of this pin bar, of this weekly close candle, and it definitely does not. It closely looks like a pin bar, but it's actually not a pin bar, but it's actually a clear case of rejection of the 30k of that territory. Massive case of rejection of the bottom, and we're clearly seeing a clear case of we've seen a clear case of a reaction. I've seen a clear case of rejection of that of the 30k territory, and a close as well above 30k as a result. So we are currently trading roughly around the 30k territory. You can see it's actually the key battle is actually around that 30k territory. So there's going to be pressure, as you can see currently at that region. So the winner of that territory will have to decide where the market will go. So far the bulls are hanging by a thread. They are hanging on fine in spite of all the pressure, enormous pressure. 30k has been we've been able to close the week above 30k. So that is so far good news for the bulls. And if the current scenario playing out on the DXY, if the pattern seems to be consistent, if the current price action seems to complement the recurring pattern around this region, we're likely to see a bounce from the Bitcoin of 30k. And if the DXY is to experience a serious retracement or possible reversal, definitely we're going to have a massive bull run for the Bitcoin. That would mean a bounce off this 30k territory to the upside. You can see that on the day we had a weekly low of 26.7. We closed the day on a doji. We had a doji close. And ever since that day we've had a little reaction to the upside. So this looked we ended up closing the day below 30k. So what you see now is basically a retracement to 30k, which seems to be the key battle. So if we're looking to see like a close below or above 30k, and getting to that level, and we're able to close the week and yesterday above 30k. So that means that it has to be flipped back to support for the bulls to stand any chance to see a rally to the upside. But if this is not the case, if the bears are able to flip it back to resistance, then that is not good news for the bulls. So far so good. The bulls are hanging on just fine in spite of all the immense pressure. So if this pattern, which seems to still be in play, if this pattern is still going to be consistent as it has been over the past 5 years, we're likely to still have that bull run. It's never still late. The pattern is still very much very much in play. It's still very much in play unless the DXY is able to defend this territory and support. Longer the DXY stays above this place, above this region, flips it back, flips it to support. If this region can hold as support for the DXY, that would mean massive strength for the DXY, and that is not good news for cryptos and forex related pairs. But if this region is flipped back to resistance for the DXY, that would mean good news for Bitcoin and forex related pairs. You can see clearly Euro USD as usual. Once again, as usual, acting as a mirror version of the DXY. You can see a clear case of divergence, bullish divergence, as we are having a clear case of bearish divergence on the DXY. We are having clear case of bullish divergence on the DXY, on the Euro USD. You can see, in spite of all this massive impulse run from the bears to the downside, we've had bullish divergence. We've had a clear case of bullish divergence. We've had a bullish divergence from the Euro USD, and then we've had another impulse run to the downside, followed by another bullish divergence. So this is, if you look at this from this point to this point, it's a clear case of a strong bullish divergence from the Euro USD. We're looking at a massive, very clear, very obvious case of a bullish divergence. We're looking at 22 to 27. So this is a clear case of bearish bullish divergence from the Euro USD. We're looking at trading at a territory. We're looking at an all 20-year low as well, an almost 20-year low as well from the Euro USD, as it is the case for the DXY. Remember that it is a mirror version of the DXY. So you can see a clear case of a bullish divergence and a clear case of an oversold scenario for the Euro USD. So if this pattern is to stay consistent, we are likely to see a push to the upside, even if not for the long term, at least for the interim for the Euro USD. So basically that is all from me today. The summary of everything is the fact that the DXY once again is very, very strong. It's currently at a very critical point in the market that would determine the state of the cryptocurrency market and the entire financial market as a whole. So the DXY's behavior, if the price action to stay consistent to complement the pattern around this region over the past 5 years, we're likely to see a reversal from the DXY and from Bitcoin and forex related pairs. So that is all from me today. I hope you got value from this. If you did, please let me know in the comment section. Feel free to like, share and subscribe, and then always remember that this is for educational purposes and not to be treated as financial advice. Financial asset trading is a risky affair, so always endeavor to carry out your own research before entering into it. Do have a lovely trading week ahead. Bye bye.